Hi, I'm Jim Jubek, and welcome to this week's Trend of the Week video. Where are the Treasury buyers? Now, the U.S. Treasury market is a huge liquid market. That's about $24 trillion right now. But we're seeing this strange and uniform retreat that the big institutional buyers, the big government buyers, this is Japanese pension funds and life insurance companies, foreign governments and central banks, U.S. commercial banks, and the Fed itself, which is sort of reducing its balance sheet by $95 billion a month. All these are not buying. In many cases, they are selling. And this is putting, of course, when this happens, if you think about what happens in a market, that means the price of the asset goes down. The yield on the Treasury goes up, because they're inversely related. So what we're seeing is as all these big buyers step back, we're seeing the 10-year Treasury, good benchmark, go up. It hit 3.91, up another 2 basis points on the 11th of October. I think that's going to continue for a while. The question, of course, is where the new buyers are going to be. And it looks like if these are the big institutions pulling back, the new buyers will probably be more like retail buyers, people who say, hey, I'm looking for safety in this market. Retail, I don't mean individual investors necessarily. We can mean mutual funds and hedge funds, Wall Street institutions, whatever, saying, hey, I'm looking for some safety. I'll buy because the yields are getting kind of attractive. One of the interesting things about this, and this was pointed out in a Bloomberg piece a couple of days ago, is that if this is the transition we're going to get in terms of who's buying, these new buyers are going to be much more yield sensitive. They're going to be looking for yield. When a pension fund is buying, they care about yield, but they're also trying to match duration, and those are things that are less important to retail buyers. So that transition itself means that yields are likely to go up. Treasury prices likely to go down as we make this transition. And until we make the transition, the Treasury market is going to be volatile for the Treasury market, not like the stock market. And yields, I think, are going to continue to go up. Thanks very much for watching. If you like this video, please give us a thumbs up. You subscribe to my YouTube channel so you can get notification when we're doing the next one. If you want more of my stuff, you can go to my free site. That's jubekpicks.com. It's got 3 portfolios, dividends, 12 to 18 month stocks, and long-term stocks. Or my paid site, jubekam.com, which has got 6 portfolios, including some option stuff and some ETFs and some reverse ETFs. And I think those things are particularly useful in a bear market like this. So thanks for watching.